Hi everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, July 8th, 2019, and we are now in the final hour of the trading day. As many of you know, in my opinion, the prices that are as close as possible to the close of the day are the most valid prices, and therefore those are the prices that the majority of the time I like to make my buying and selling decisions from. So anyway, let me just check here and make sure that I'm coming through. I think so. So how's everybody doing today? I hope everybody had a good 4th of July and a good 4th of July weekend. All right, so it looks like we're up and running pretty well here today. All right, so before we get started, the market is having a down day today. The Dow's down 137 points, about 0.5%. The Nasdaq's down 68 points, down 0.84%, and the S&P's down 16.75, about 0.56%. So we are having a red day today, but that is just part of trading. So let's take a look here. All right, so the plan for today, the format for today as always, is first of all, we're going to go ahead and run the U.S. legal disclaimer. After we come back from that, we're going to take a look at all my current positions. We're going to take a look at when I bought them, why I bought them, and most importantly, how I'm going to manage them going forward. Then after that, we're going to do a few minutes on trader psychology. And then we're going to go through my watch list. We're going to go through each stock in my watch list. We're going to take a look at the technicals, support and resistance levels, moving averages, RSIs, ATR channels, all sorts of stuff. And we're going to see if there are any potential candidates to buy at the end of the day if they qualify. And then after that, after the market closes, if anybody has any questions at all about what I discussed today, if you need some clarification, please let me know. Don't be shy. Just go ahead and enter your questions into the chat and I will do my best to clarify. And then also, if you would like me to take a look at any particular stocks that you're interested in or any particular stocks that you're holding, I'm happy to give you my opinion on that as well. So that's the format for today. I appreciate everybody coming by and taking time out of their busy schedule, and I hope that you'll be able to learn something today during this live stream. So okay, so that's the plan. Let me run the U.S. legal disclaimer, and I will be back in about 40 seconds. So hang tight, please. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, so listen, before we get started, I got a new puppy over the weekend. And it's not going to be mine forever. I'm babysitting it for 2 months, and then her final destination is Hawaii. But they have a quarantine situation there where they need shots in the mainland for a certain amount of time. So I have a new addition to my family. Here she is. The new owner named her Cooey. Here is Katie. I'm sure many of you have seen Katie before, but here's Cooey. This is their first meeting. And man, I'll tell you what, how a little 11-pound dog can upset the apple cart and change your daily routine. Oh my gosh. I think I barely slept this weekend. I mean, she's brand new, but anyway, so she's a new addition. She's really fun. She's really cute. She's a golden doodle, part golden retriever and part poodle, but just a whole lot of fun and a whole lot of work. So hopefully I can get into a routine here where she can sleep and I can sleep. So anyway, I just wanted to show you my new little addition. Hey, Mount Doji. How you doing, my friend? Good to see you. Thanks for coming by. Hope you had a good weekend. Hi, William. Good to see you. I got your email and I replied back to it in case you haven't seen that. But yeah, good thoughts on that email. Ramble's here. Hey, good to see you, Ramble. Hope you're doing well, Ron. All right, so let's get to it and see what the market has done to our positions today. All right, so Google. So I took 2 trades on this recently. I took a trade here back on July 2nd, and the reason I took that was based upon the 1030 SMA cross. You can see the pink line is the 10, the blue is the 30. I did take it there. I entered based upon this mechanical entry, this mechanical crossover, but this is a discretionary trade for me. I'm not going to hold it like a robot because when you take stocks on a long-term crossover, you're going to have to hold through earnings, and generally, or actually, I never do that. So I did enter here. I'll go back to the other chart now. Did enter here. I did exit the next day when it rejected the 200-day moving average. But then the next day, which was Friday, it did have a nice strong close above the 200-day. So I re-entered again using the 200-day as my end of day stop. But today it has reversed on us, and that's never fun, but that's just part of trading. So if Google does close below the 200-day today, I will exit this trade for a small loss. So we made a little here, we're going to lose a little here. Net, it's going to be a loss, but not too bad. And as I always tell everyone, if you want to be a profitable trader, you have different options. You can have big wins, you can have small wins, you can have break-even wins, or you can have small losses. And those are the only possible outcomes. You start getting big losses in there, and that's what will make you a losing trader. So, the majority of people in this business that lose money, there's 2 things they're doing wrong. It really distills down to 2 things. 1, they have too large a position size, and 2, they hold their stocks on the wrong side of the moving average. It really is simple as that. If I decided to stay in this trade today, which I won't unless it closes back above the 200-day, but now my prices are below the moving average. So you talk to anyone that's had a big loss, I don't even have to know what they bought, what happened. I know immediately they took too large a position size and they kept the stock when it was under the moving averages. It can't go any other way. So hope that makes sense. And if you think about it that way, stay in your stocks when they're above your moving averages, right? When they're below your moving averages, get out, because eventually a big sell-off is going to happen under your moving average. So position size correctly, stay on the right side of your moving average. I hate to oversimplify it, but really that's what it comes down to. Hey, Johnny's here. Good to see you, Johnny. Good to have you back, my friend. All right. So Google, again, did rebuy that on Friday with that nice strong close above the 200. I did like that the 200-day was about halfway of this bar, adding some additional support from a Fibonacci standpoint. But today, looks like we're going to close under. Hopefully running into the end of the day, maybe it will reverse back up into here and we'll turn a 10-yard loss into maybe a 6.5-yard loss. So that's the plan on Google. All right, IWM. I did purchase IWM back here on the 28th of June. When we had the 1050 SMA cross. That's when the 10 moving average, simple moving average, crossed over the 50 moving average. The next day, it immediately went our way. We took 2 profits on this. It immediately reversed back up, went back up. We took a profit target. So I have exited about 30% of this position right here. I will be holding this until the 10 crosses back below the 50 for a mechanical trade. So regardless of what happens here, I'm going to stay in this position unless one, I phase out to the upside until I don't have any more shares left, or two, the 10 crosses back below the 50. And these are tough trades for me to take because I'm an active, responsive trader. But it's important, I have found in my 24 years of trading, it's important that you have different trading approaches, because there's going to be some times where you have a nice move up and it just keeps going. And if you're a swing and discretionary trader, you're never going to be able to get in that trade. It's possible that you're not going to have some kind of setup, and it just keeps on going. Doesn't happen all the time, but sometimes it happens. And if you get a market like that, then even if you can't find any entries for your swing and discretionary trades, at least you have some kind of trade going on your mechanical side. So again, IWM, if the 10 crosses below the 50, I will exit this. If it keeps moving up, I will continue to phase until I'm out of the position. So hope that makes sense, but is down today, and we'll just see what happens. Philip Morris. All right. So I did buy Philip Morris back here on the 3rd of July with this nice strong close above the 200-day moving average. My initial stop is a close below the 200-day moving average, or I will keep phasing out to the upside. You can see Friday went way down, right? But it did end up closing back over the 200-day moving average, and so I kept the trade. So, like I've repeated many times, I base my buying and selling decisions upon the closing price of the stock as close as I can to the close of the market. So today was able to hit one profit target right here at the top, which is nice. I mean, it doesn't make a big difference because it immediately reversed back down, but hey, better that than nothing, right? So at least we did take some profit, about 12% of the trade off here at the top. It pays for a lot of commissions, if nothing else, right? But today it looks like we are going to close below the 200-day unless we have some kind of miraculous close. So we'll watch this till the end of the day, and with the close under the 200-day, I will be getting out of the position. All right, PayPal. I did buy PayPal back here on June 28th, and I bought it because we had this nice V2 here. We made a higher high. We came back into the value zone in between the two green lines, which is the 1 and the -1 ATR. And then we had this V2. Here's day 1, here's day 2, here's day 3. Day 1 washes out day 1. Day 3 closes above day 1. Now, I did want to point out, especially to William, I wrote him back and I said, look, be careful for gaps on V1s or V2s. Well, this was a gap, right? This was a previous closed. It was a gap, but intraday it came back and filled that gap. So this was a legitimate entry. The reasons I don't like to take V1s, V2s when you have a large gap, and when I mean a large gap, anything over a quarter ATR gap, is that gaps tend to want to get filled. The market tends to want to fill those gaps in order to try to test those areas that were not tested overnight. So, but in this particular case, yes, it initially gapped, and if it had gapped here and gone up without testing, I would not have taken this trade. But because it came and filled that gap intraday and tested it and then triggered the V2, that's why I took it. So I hope that makes sense. If anybody has any questions about that, let me know. But it is an important nuance. So we did buy here at 114.59. We had a big strong day up. The next day we hit several profit targets. Next day went back down. Next day it went up. We hit another profit target. The next day we hit another profit target. The next day it was down. Today it was down much lower earlier today, but it has reversed, so that's a good sign. So these are my 3 profit targets today. I don't think we're going to hit any of that, but the more important point is, where is my stop going to be on this going forward? We know if it keeps moving up, I'm going to continue to phase out of my shares, but where am I going to where's going to be my stop? So I bought it down here, right? But it's moved nicely from my entry. I don't want to wait all the way back to the 20-day now. It just doesn't make any sense. So I'm going to use the 10-day as my trailing stop because I don't want to give back all the profit. It's nice that we took some profit targets up here, but going forward, the 10-day, a close below the 10-day will be my trailing stop on this trade. So it's been a nice trade so far. Boy, looks like it might even go positive. It did go positive. So, all right. Have one eye on the dog over here, having to make sure that she's not chewing anything up. Okay. SPY. All right, so as many of you know, I buy the SPY each day at the end of the market, right at the close, and I sell it first thing in the morning. So Friday I did buy it at 298.46. Today had to sell it at 297.01. So it was a loss. But you might ask yourself, why are you doing that, Greg? So this is based upon a study from @Bespoke Invest. Liz Ann Saunders reposted this here, but here is the test. This is back from 1993. Buying the SPY at the open in the morning and selling it at the close every day since 1993. If you would have done that, you would have actually had a negative 13.9% return. That's buying it in the morning, selling it in the afternoon. But if you did the opposite and you actually bought the SPY at the close and then you sold it first thing the next morning, you would have actually returned 634.2%, meaning that more than all performance in the S&P SPY from 1993 came in after hours trading. It came in the after hours and the pre-market. And you can see this graph here. This is a little bit different graph. But here, the blue line here, this is the buying in the afternoon, selling in the morning, 634.2% return. The orange line down here, buying it on the open, selling it on the close, you would have actually lost 13.9%. So you can see it's a huge difference. I mean, and it really, in a powerful way shows you that the increase in prices come in the after hours and the pre-market. That's why, day trading is tough. It's a tough way to go because most of the move comes in the after hours. It doesn't come during the day. And when you're a day trader, that's when you're trying to make your money. But you can see the edge is holding your positions overnight. And I mean, I can't tell you, and you guys have seen it, how many profit targets I've hit just like right at the open, right? And they add up. I'm telling you what, they add up. So this is why I buy the SPY every day at the close, and I sell it first thing in the morning. The last couple days have been negative trades, right? Buy at the close, sell at the open for a loss. Buy at the close, sell at the open for a loss. But I've been doing this since February 26th. It's been very profitable. May was a tough month. May was a negative month on it, but you have to take the long-term approach on this trade. You have to, I look at this as basically a buy and hold trade that I just have to make a couple clicks with every day. And it's important that you position size correctly, a 5% position size of your capital, a 10% position size of your capital, because it does have ups and downs, and you are going to go through ups and downs. And I already have gone through ups and downs with this, but net, it's been positive. You can see the statistics. There's a huge edge over time using this approach. So always be careful, position size correctly. And when I mean 5% position size, 10% position size, I don't mean that's how much of your position size you're risking. I mean, that is how much you're actually buying stock. So if you had a $10,000 account and you use a 10% position size, you're going to be buying $1,000 worth of SPY. So anyway, couple losses in a row, but still nice and profitable. And so I will be buying this again at the end of the day. All right, Verizon. Scott Montgomery, hey Greg, what is the percentage that you set your stop loss to, 10% or 12%? I know it's a personal choice, so I like to ask other colleagues what they set at. You know, Scott, I personally, and when we're talking about stop losses, like I'm talking about my emergency stops, so that during the day, I have my trailing stops and my initial stops, but I have a emergency stop in place in case it goes down too far during the day. Then I just have to exit it. But I use a 5% position size. I'm sorry, 5% stop loss. I think a 10 or 12% is just a little too much for me. If something goes down 10%, then I just don't want to have to let it go that far. If it goes 5%, that's telling me something's not going well with the trade. I mean, people use a 10% positions or a 10 or 12% stop losses when they're more long-term position traders, but because I'm more of a swing trader and a trend trader, it's a little too much for me. So, I know a lot of people position size based upon a 10%, which is fine. But 5% gives me a little more reactiveness and a little quicker. So that's my personal opinion. Not that it's right, but that's just what I've been using for 24 years. Hey, Frederick, good to see you, my friend. Hey, Steve Burns is here. Oh, that's awesome. Hi, Greg. The market has returned to range bound after a great June. Yeah, it's true. We had a really nice June. It moved up nicely for us. When you get into that mode where you're making money every day, and I mean, obviously it's a great feeling, but it doesn't always last. It's going to become range bound or it's going to go down, and you have to be okay with that. As long as you're making 2 steps forward, 1 step back, you're making progress. But, let's get our mind wrapped around possibly, just moving sideways or down from here. Steve, it's always good to see you, man. Really appreciate you coming by. I'm always excited when you're here, and I know everyone else is. So, yep, we'll just take what the market gives us. Ramble says, could it be said that all the movement of the SPY came after hours, so shorting it is a possibility? Well, it's a good point, Ron. I mean, I wouldn't do that. I'd have to see some kind of back test on that. But from the logic standpoint, I guess you could make that logical decision. But I generally don't like to. Generally don't like to short very many stocks and the S&P as well. I mean, there's a drift, Ron. There's a drift in the tendency of the market, and the drift in the S&P is upwards. There's more upwards drift or more upwards tendency than downwards industry. But it's a good point. It's a really good point. But I honestly don't quite know. Maybe Steve has some thoughts on that. Scott says 5% right on. Thank you for the info. It's great. It's great. Have many different answers to this question. Yeah, there's not one real right answer, Scott. Okay, so where were we? Verizon. So I did buy Verizon back here on the 2nd of July. We had a nice, big, strong candle bar. It was a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 obviously closes above day 1's close. Now this did gap, right? And I just talked about not taking gaps, but this wasn't just a V1, V2 entry for me. This was more of kind of a trend change where in one day, we went above all the moving averages at one time. Now I bought it right here. I only took a 1/2 position here because of this big bar. I was kind of expecting it to come back and backfill a little bit. And if it would have come back and held the halfway of this bar, I would have added a second position. But in case it went off without me, I wanted to have something. So it's conservative. I took a half position size on here. In the coming days, if we do come back down here, close above the halfway of this mark, I will add that second position. but we'll just have to see what happens. So we're about break even on this trade. We're actually up on the trade because we did take some profits up here. So my where is going to be my my stop on this trade? Right here, right now, it's going to be the 20-day moving average because it lines up with about halfway of this bar. So yeah, so we're having a down day all across the board, but we'll just do our best and trade our plan the way we made our plan, right? So let's see. Steve said, intraday shorting of the SPY would have also been flat. My mechanical short side system in S&P lose money more on false signals than they make in actual bear markets, and downtrends are far more volatile than uptrends. Yeah, they are. I think shorting is it's a tough road. It's a rocky road to short. And when you see the market go down, of course you think, man, I wish I would have shorted it there. But a lot of times your eyes will see where you would have made money, but your eyes will not see where you have lost money. So, okay. And then my last position, this is a option trade that I sold on Etsy. I sold it down to $55, expiring on Friday. And real quickly, why did I pick $55 on Etsy? And I'll tell you. So, I like to see the strike price I'm selling line up on 3 different time frames: the monthly, the weekly, and the daily. And I'd like to see on all 3 time frames that there's some kind of support there from moving averages or other things before I write the put, before I sell the put. So on the monthly, the $55 mark is coinciding with this one ATR channel. So the prices are above the ATR channel. The ATR channel below it should give it some support if it gets down there. But so $55 on the monthly. On the weekly, the $55 mark lines up. At the time I wrote it, it was right at the 50-week moving average. But still in the general spirit of things, I think it should find some support there. On the daily, the $55 mark lines up now with the 250-day moving average, or 250-day moving average, and it also lines up with the 30 RSI. So looking pretty good on this. I'm just trying to exit this trade and take my profits here. I have about 85% of the premium that I get, and I have 14.42% protection by Friday. So I've been trying to get out of this. I want to get out of this at the bid and not the ask. So anyway, so that's been a nice trade too. And I do like to sell options. It is a dangerous thing if you don't know what you're doing. It's important that you really be patient, look for strike prices that line up on multiple time frames, position size small, but profit selling puts is another profit area for me. So, all right, so that's about it. Hey, before we go through the stocks for today, this is from @M Trading Media, and when I saw this, it really did resonate with me. But they wrote, and you should check out that channel. It's a good channel. They have good information. But is this trading what you want to do with your life? Once the initial excitement and rush has worn off from trading every single day, you might realize that trading isn't really as glamorous as some make it out to be. For the winning long-term trader, it is a daily grind. And it is so true, everyone. I mean, I know when you start trading, it's exciting and it feels like you're really part of something, and you are, right? It's exciting. But when you've done it for 24 years like I have, it does become a grind. If you're treating this as a business and not as excitement or as a gamble, it gets boring. And actually, I think you're trading properly and position sizing properly when it feels boring. It should not feel exciting to you. I mean, really, you should be bored out of your mind if you're trading correctly. If you're getting adrenaline rushes, then you're probably position sizing too large. Yeah, once the initial excitement of the rush has worn off, you might realize that trading isn't really as glamorous. To me, it's not that glamorous. I mean, it's a hard way to make an easy living, but I would rather do that than, work at some kind of other type of job or run another type of business. So, if you have issues with impulsivity, with gambling, you really need to be careful, right? I mean, because we could go a month or 2 months or 3 months just going backward, just going sidewards, really not making anything, really not losing anything. I mean, in my experience, I probably make the majority of my money each year, maybe 3 months a year. All the rest of the months are down or just chopping sidewards. So again, trading is a mental thing. You have to be in the right mindset. And a lot of people get bored. They feel like it's a grind. They're like, well, I'm just going to take a shot at this stock or that stock. Well, yeah, you'll get some excitement from it, and it will break up the monotony. But treat trading like a business, everybody. A lot of months out of the year, probably 3/4 out of the year, you're going to be dealing with losses, and you're going to be just dealing with chopping around. So anyway, I did want to show that to you. That's from at M Trading Media. It's a good site, so you might want to check that out. Okay, let's see where we're at here. Steve says selling cash secured put options are short are like getting paid to buy a stock when you want it anyway. Yeah, that's exactly how I always look at it. I don't sell anything unless I really want to buy it at that price. Steve Burns says that tweet is the truth. Trading has to be like running a business or being an entrepreneur. Same principles apply. Yep. All right, everybody, let's take a look and see if there's anything on deck for today. All right. Well, Apple had some news that hurt it today. You can see it's down about 2%. It's gapped down. I'm not interested in Apple today, but looking out a few days or next week, so forth, we are now back into the value zone, right? We've been above value this whole time, and usually when you're above value, you eventually come back into value. So what I want to see here is I want to see these bars starting to narrow, start moving sideways, start showing me that there's not as much supply left. There's a lot of supply that's come into the market. That's why we gapped down. That's why we're down today, right? So I'm not going to go ahead and buy that today. I need the market to show me that the selling pressure is easing off, moving sidewards, and then, like always, having a V1 or V2, a stab down, reverse with the V1, V2 to get me back into the market. But I can't anticipate it. I can't guess. I just have to let the market tell me when it's going to do that. But to me, it is a good sign we're coming back into value because I like to buy my V1s and V2s in the value zone. So nothing on Apple today. Advanced Micro Devices is having a nice day today. 62 RSI. We did have a MACD crossover back here a few days ago. Nothing for me today, but I'm glad to see that's moving up strongly. Amazon actually up today. It was down earlier. That's good. It's actually has broken out of this previous range up here, and it's keeping it up here, at least on a closing basis. It's the 65.28 RSI, so a little too high for me to buy today. We did buy it back here when we had, what's the cross we had? 550, yeah. We had the 550 cross, which is a good quantified back-tested approach for Amazon. I did buy it here, but I didn't like the price action here when it rejected the third ATR channel and closed back. So that was a good little trade, but nothing on Amazon today. Boeing. Well, Boeing lost that 200-day and it's just continued to move down. Where would I be interested in Boeing? I'd like to see Boeing get to like a confluence of possibly the 30 RSI and the third ATR channel. That's somewhere where I would be interested in buying Boeing, but nothing on Boeing today. Alibaba. So Alibaba had this nice strong close above the 200. It really worked out for a while. But today it has sold off. But on the bright side for us, looking in the future here, not if you own it. I know that's a bad day if you own it. But going forward, looking for another entry to the long side on here, we are back into the value zone. So, it's back in the value zone. Doesn't mean we buy it, but it means we want to keep our eye on it, because being back in the value zone is a good thing. We just want to see the bars start moving sideways. We want to see a spike down, V1, V2, and trigger us back up into the trade in the direction that we want it to go. So we'll see what happens with Alibaba, but nothing on Alibaba today. Caterpillar, has been going down the last week. But again, it's a theme here, right? We've had this nice move up. We don't want to chase it up here at these levels, but we want to be patient and wait for it to come back down into the value zone and then look for a trigger. So nothing on Caterpillar now, but it's starting to kind of get on my radar here, because a lot of these big stocks now have come back. They've had pullbacks back into the value zone. Canopy Growth did have this nice V1. I did not buy it here. The reason I didn't buy it was because if I would have bought it here, it was close to the 50 RSI. I think it was like 46. The 50 RSI was above us. It didn't give me a good risk to reward ratio. One thing I do want to point out here is that this is about halfway of this big bar. So I've been looking at adding this position if I could have got a better price, but right now, do you see how we are actually the closing price here, or the last price is under halfway? So it's a fine line. Like if it closed back above the halfway of this bar today, I actually probably would buy it. Just because there's some strength here at the 50% fib number of this big large bar. And you can see on the big bar, we had a lot of volume to the upside. We've come down, but on smaller volume. So to me, it doesn't look like distribution. It looks like some profit taking. But we'll watch this at the end of the day, see if it can close above that halfway mark. Cisco, nothing really on Cisco today. DDM, again, we have been above value here, kind of high RSI levels. I want to see it come back down into the value zone. This was a really nice trade we took on DDM back on June 6th when we had this big strong close above the 200-day moving average. You can see that was a great trade. This was a mechanical trade. I'm going to stay in it as long as it stays above the 200-day, and I'm going to phase out until I'm out of shares, or conversely, if it closes under the 200, I'm going to be getting out of that and being very impatient with that loss. But it did go our way. We phased out, moved sideways, phased out, and got out of the trade up here. So that was a good example of a nice mechanical close back above the 200-day moving average. The Dow's the same. Disney. So we are above the 1 ATR channel. We still have a lower high than this previous high over here. Again, for me to get involved in Disney here, I'd have to have some kind of move back into the value zone. It would be nice if we got into the value zone. It'd be nice if we got down to a 50 RSI to have some support underneath this, move sideways, V1, V2s. But it's too high for me to buy here. You can see I did buy it back here on the 3rd of June. 1, it was in the value zone, right? 2, it was a nice V2. Here's day 1, 2, 3. Day 2 washes out day 1. Day 3 closes above day 1. My stop would have been right about here if I was wrong for a small stop, but you can see it was a good trade. Did move out. We phased out all the way up to here, but nothing on Disney today. Etsy, we talked about that. I do have that put down there to $55 till Friday. Kind of an example here. I do want to show you. Here we've made a higher low V1. Here's day 1, here's day 2. Day 2 washes out day 1, and it looks like it's going to close back above. And it also tested below the 1 ATR channel day and back over. It's okay. I mean, currently right now, it looks like it might close above 50 RSI, but when I do have a higher low, ideally I like to have 2 bars down before the V1 or V2, because in my experience, after 2 bars, if you have a move down, a lot of times you'll have another move down. But after that, to me, that's the more ideal place to have a V1, V2, where this just had 1 bar. So I'm not going to buy anything with that, but I did want to point that out. All right, Ford Motor. Nothing really there. We did break out to this new range and close back into the old range. But it's just too high in the value zone for me to buy anything here today. Facebook has recovered a lot of its loss today. It's up near the third ATR channel in the mid 60s, so it's a little too high. Surprise, surprise, I'd like to see this come back into the value zone, move sideways, get a V1, V2. That would be where I would be interested. Five Below's having a nice day today. 53 RSI, MACD went positive. We have the 1 ATR channel and the 50 moving average above here. I don't think I would buy here. Gold, we had that huge run up. We sold off. We attempted to rally. We came back down. We now have a lower high in place, but same as well as like a lot of the other stocks, right? I mean, this is gold, but again, doesn't matter. I'd like to see this come back down into the value zone. Look for a V1, V2 entry. Buying up in these ranges are just too high. You can see we had a nice trade back here, mechanical entry with the 520 EMA cross. At the same time, we triggered this fractal. A fractal is where you have a high with 2 lower highs to the left, 2 lower highs to the right. So we had a nice confluence there of a fractal, 520 moving average, happened within the channel, happened within value, in other words. And you can see that was a really nice trade that we got right up to about here. But I need to pull back on gold to get me interested, specifically back here in the value zone. Google is attempting to move back up today, so that's good. But again, if it closes below the 200-day, I'm out of the trade, right? I want to be really impatient with my loss. Unfortunately, it was a loss, but it's not a bad loss, right? It's something we can recover from. But where you're really getting into trouble is if you think, well, I'll just give it one more day. I'll just give it one more day. Well, it could be down to here. You never know, right? So the best losses are the ones that sting just a little bit, but you don't even think about the end of the day. The ones that you think about for a day or 2 or 3 are the ones that you've really let go too far. Goldman Sachs. Well, it's just moving sideways here. It's range bound. It's back underneath the third ATR channel. So really nothing. I'd like to see this come back down into the value zone, possibly test the 200-day again. But nothing today. We did take a nice trade on this back on the 27th of June when we had a higher low. See how this low is higher than this low? We had a higher low break above the 200, which is always good. We also took out this fractal, which is also good. And we had a 2-day trade on this, nice big 2-day trade on this. It did test the 70 RSI intraday and close below. That's why I got out of this trade. So anyway, nothing on Goldman Sachs. IBB, boy, it's had a big strong down day today underneath the 200, so nothing there. But keep in mind, it did come from a higher high. We are back in the value zone, so we need to see this move sideways for 2 or 3 or 4 days, and then look for a V1, V2 entry. And by the way, you hear me talking about V1, V2 entries. In the description of this video, I have probably my 4 most important lessons, and there's video links to these lessons to my YouTube channel. What chart indicators I use, what kind of setups I take, what indicators that I use, and how I phase out of my position. So, do yourself a favor. If you get some time, go and watch those. And I think it will make a little bit more clear what I'm talking about here every day, because everything I'm talking about here today is in one of those video lessons. So they're free. Go ahead, just watch them, and I think they'll help. The Russell, we have the Russell today. So as long as the 10 stays above the 50, we're going to hold that. Coca-Cola, nothing here today. It's just kind of chopping around. We did buy this back here, back on the 1st of July when we had a nice 2-day move to the upside. Excuse me. It rejected this high, closed underneath. That's why I exited, but it was a nice 2-day trade. Boy, excuse me. I'm allergic to the dog, maybe. Lockheed Martin has moved up nice and strong. It's too high for me to do anything with today. I'd like to see it come back into the value zone before I enter another position. You can see we bought back here again in the value zone on May 29th with this nice V1. It was higher, came into the value zone, moved sideways, spiked down, reversed, and you can see that was a really nice trade we took. But we haven't had anything since then. MasterCard down a little bit today. It's just too high right here. Again, I needed to come back into the value zone. We had a couple good trades on this. We shorted MasterCard here, got out down here. We reversed, went long, where here's another example. We make a higher high, we come back into the value zone. We kind of stopped going down here. We spiked down, we reversed back up. We went long here, up to here, got out of about 50% of our position. And then this down day got us out, but still a nice profitable trade. But going forward, need to see something in the value zone there. 3M. Boy, sorry. Losing my voice. I know it's the doggy. Nothing on 3M. I got to grab a drink, everybody. I'm sorry, otherwise I won't be able to finish. Okay, boy, I apologize. Hope we can get through this. Merck, back into the value zone. Too big of a bar right here right now. Boy, sorry. But we are in the value zone. I want to see this move sideways. Look for a V1, V2. Microsoft, nothing here today. Need to move back in the value zone. Netflix making a higher high, that's good, but don't want to chase it in these levels again. Looking for it to drip back down into the value zone. Nike, big move today. My goodness. My goodness. All right, back to Philip Morris. Close under the 200-day. We'll get out of that. PayPal looks fine so far. I'm going to use the 10-day as my trailing stop there. The Q's recovering a little bit. Still too high, though. Again, like a broken record, back into the value zone. Here's an example of a nice mechanical trade that I took on the Q's with close back above the 200. Just mechanical, like a robot. If it stays above the 200, continue to stay in the trade, get out of it if it closes under the 200, and we phased out, phased out, phased out, phased out, phased out, phased out, and then I believe it was here that we exited the rest of our position. So this was a beautiful, nice, long-term trade based upon the mechanical entry of the 200. Silver. Well, we are back into the value zone. But this was too large of a bar. This is going to have to move sideways for a few days before anything really pops up for us. S&P, we talked about that. We took that loss overnight. I will be buying this at the end of the day. Square, currently we've made a lower high from that previous high. Again, it's starting to come back into the value zone. Where I'd really get interested on Square, and I think this would be a good trade, is if we can test that 200-day moving average, because the 200-day moving average is in the value zone. So really what we'd be looking for here is a rejection of the 200-day, close back above, and if you had a V1, V2 on top of it, that'd be even sweeter. This is a good example of another approach that I use which is a double bottom with a bullish divergence. Here's the low. We have a rally. We make a lower low. The MACD readings here are more shallow than the previous low, meaning that the momentum to the downside is running out. And then we have this nice V2 entry that triggered us into the trade here. We had a false breakout to the downside. We had a V2 entry. We went below the channel, closed back in the channel, and this was a really nice trade. One of the best trades we'd have of the year, 14% trade, and we phased out all the way. Pro shares is the double leveraged S&P, nothing there. AT&T is doing well, too high. Bonds, oh man, I only got 10 minutes. Bonds has been choppy here. Nothing here, maybe back into the value zone. Watch the bars narrow, look for V1, V2. Tesla, down, down, down ever since that gap up high, but again, coming back down into the value zone, but nothing today. Natural gas, nothing there. Oil, down a little bit today, so nothing there. The dollar, strong again. Holding the gap from Friday's gap up, but nothing there. Visa, nope. VIX. So I am going to take a quarter of a percent position size, a 2.5% position size today on VIX if it holds above the 30 RSI and it holds above the third ATR channel. So this is going to be a very small position, 2.5% position size, but the VIX does look to me like it is starting to wake up a little bit. So I don't mind having this position here, even at the very least as a little bit of insurance. But from a technical standpoint, it does qualify. It went under 30, back over 30. It went under the third ATR channel, back over the third ATR channel. Just to give you a quick example, the same situation happened here on SSO. We went under 30 RSI, closed above 30 RSI. Went under the third ATR channel, closed above the third ATR channel. And you can see that was a beautiful trade for us. Very difficult to buy down at these levels. I understand that's super difficult. But, you know, if that's part of your plan, when those indicators do that, you know, go ahead and take your position. So on VIX, that's exactly what's happening today. The VIX is volatile. It's a wild animal, so that's why I'm only taking a quarter position size. But I will be buying that today at the end of the market. Verizon, we have this. Again, I'm going to be using the 20-day here as my stop because it's halfway of this bar. Energy's moving up today. That's good. It's holding above the 10-day moving average, but nothing there. Financials down today. Good thing Mount Doji got out of that on Friday. So you got close to the top. Nice trade on that Mount Doji. Real estate, really nothing there. Utilities, nothing there. And healthcare, big down day today, but again, we are back into the value zone. So let's see if we can see those bars narrow, move sideways, look for a V1, V2. So really the only thing today was I was possibly looking at canopy growth if we could close above halfway. Doesn't look like that's going to happen at the moment. And VIX, I will be buying that. So really it looks like VIX is about my only potential entry today. So let's go back to our current positions, which are most important. So Google looks like that will be an exit. So I'm just going to go in here. All right, and then we got Google over here. And enter in those orders. IWM we're going to keep. That's our moving our mechanical trade. Philip Morris most likely is going to close under the 200-day. So we're going to have to get rid of that.
Order cancelled. Order cancelled.
Oh, okay. So that's not letting me do that on that one. PayPal, we're fine. SPY, we're going to buy that at the end of the day. And Verizon, we are also fine on that. So let me go ahead then.
Order cancelled.
All right.
Order cancelled. Order partially filled. Order filled.
All right.
Order partially filled.
Okay.
Order filled.
So I've got it set up to sell Google at the end of the day. IWM, we're keeping. Philip Morris, I just sold just to get that out of the way. PayPal, we're fine. SPY are going to be buying that at the end of the day. And Verizon looks like we're fine. And then VIX. Going to come in here and put my order in for VIX for a 1/4 position size. Okay, so I'm going to go ahead and buy that right now.
Order filled.
All right.
Order partially filled.
24.21
Order filled.
is the entry on the VIX. Oh, I got it right there. All right, and then have the orders in to go ahead and just buy our SPY at the open. I'm sorry, at the close here. So I think we have everything taken care of. Google is going to sell at the close. IWM, we're fine with the crossover. I already did get out of the Philip Morris and just locked in that loss. PayPal is fine down to the 10. SPY, we're buying that at the end of the day, and we'll see where that happens. And Verizon is hanging in there for us, although down today at the 20. So yeah, down day today. So I mean, market's down 118 points, but it's really the NASDAQ that's taken the brunt of this. Okay. Scott says, it's hard for me to see, but are you doing your trade on the same platform as the screen? No, I'm not, Scott. I use Trade Navigator as my charting platform, and then I use Interactive Brokers as my broker. I believe on Trade Navigator you can do that. It has the option, but I like using Interactive Brokers because, you know, it's such a low cost. It's about $1 a trade, which is just super important, especially if you have a small account. Boy, those commissions can add up. I think to date, I have probably spent about year to date. I've probably spent about $1,800 on commission so far. But you know, imagine if I was somewhere where I was paying, you know, $5 a trade. It'd be 5 times that. So it's very important to use a good broker, but a low cost broker. Something in the $1.50 range. On your commissions, because they can add up. They can add up to about 20-25% of your profit at the end of the year. So it's very important. But yeah, I mean, Interactive Brokers is good. I mean, it is good. All right, so what do we have? I think we have about 15 seconds left. Everything's taken care of. The only thing that I bought today was VIX. I am getting rid of Google. I am getting rid of of Philip Morris. So, the market's not reacting very
Order
well
filled.
right now. I'm not going to really
Order
concentrating on making money here. I'm kind of concentrating on preserving capital here and waiting until we get some setups that, look good and they're valid setups. So, all right. So looks like we got filled on 296.82 on the SPY. 296.82. So that's our new overnight trade on the SPY. And we did get rid of Google. Google is gone. Philip Morris is gone. So we'll keep the rest. And we added the VIX at 24.21, and now it's 24.25. So anyway, red day today. It's never fun. But it is part of trading, and we should all learn to become, I think Stephen Burns used this quote, but it really resonated with me. He goes, we need to become good losers, whether it's on the playground or whether it's on the trading floor. We are going to lose a lot. So we have to get used to it. We can't burn too many calories on worrying about it. But yeah, become a good loser, and position size. So when you do get a loss, you're just like, it's okay. So anyway, if anyone has any questions, please let me know. Feel free to type it into the chat. Don't be shy. I'm happy to answer any questions that you have. But before we get to the answer part, I just do want to do a quick little plug for me. I do offer private one-on-one coaching and teaching and mentoring lessons in the evening time via Skype. I really love to teach. I've had really good success with my clients. I've turned a couple of them. You wouldn't believe how I've turned them around from huge losers to actually making money now. And it seems like they're in an alternate universe. I can't really believe they've been making money because they have been losing money for so long. But my hourly rates and my contact information are in the description of this video. So feel free to reach out, send me an email. You can send me a message on Twitter. It generally just starts with a free phone call, just so we can get to know each other a little bit better. I want to learn about you and your trading, how you got into trading, how you're trading, what your challenges are. And really what your goals are. And then I'll go ahead and create, a custom lesson plan for you so I can help you achieve those goals. And, we'll do that on Skype in the evening time. But after I teach the lesson, be ready for a lot of questions, because I'm going to turn it around and I'm going to make you teach it back to me, because then I'll really know that you understand what you're doing if you can actually teach it back to me. So anyway, if that's of interest, please let me know. And then also, if you like this video, if you're getting some good information from this channel, if it's helping you in your trading, please do me a favor, hit the thumbs up button. It helps Google promote it out to more people. And there's a lot of people out there that need help with their trading. There really, really is. So that's what I try to do with that channel. So, help me spread the word, tell your friends about it, maybe share it on social media, but any little bit helps. So appreciate that. Okay, so let's see if anyone has any questions for today. Steve says, Merrill Lynch Edge gives me 100 free trades a month because I keep a high level of capital with them across my accounts. Oh, that's awesome. That's better than $1 a share. But it is important. I mean, I'm paying about $1 a share, and I just, $1,800, $2,000, somewhere in there that I've paid this year in commission so far. Imagine if I was even at Schwab at $4.95 a trade.
Order cancel.
I mean, that's a ton of money. So, you can't control where the market's going to go, where it's going to go, what direction it's going to do, but you can control what your commission cost is. So you're going to save a lot of money there if you could just find yourself a good, low-priced broker. And in my experience, Interactive Brokers works really well. I know Robinhood's free. I've never used Robinhood. Almost seems too good to be true, but I don't know. Maybe some of you have some experience out there. Chris F. Hey, Chris F. Thanks for coming by. Appreciate it. Chris says IB is a good platform. I think so. Yep. Commissions are very good, but the platform may take some getting used to. Yes, I agree. I agree with that. Steve says losing in trading is a skill itself. Aha. That makes sense, right? It's so right what he wrote there. I mean, you got to be a good loser. You have to know how to handle losers. And not just, oh, I hate it because I lost. It's more, I think the more important part there, the deeper part of that sentence is you can't let losing days and losing sessions destabilize you so you do something dumb. That's really why you want to, because you're in a good mood, things are going up, you're going to trade correctly. Have you ever noticed people that play poker? They can be really good poker players, but they get one bad beat, they get sucked out on the river, and they just completely go on tilt, and they're just betting everything and doing everything. It's the same with trading, everyone. Be a good loser. Don't destabilize yourself. Mount Doji says, would love to hear your thoughts on XOM and Twitter. All right. All right, so here's XOM. So here's the thing, Mount Doji, and I know probably a portion of why you're looking at this is probably the 200-day, I think, if I'm right. And technically we did have a V2 here as well, but let me just start with the 200. Do you see how we're above, below, above, below, above? The market and the price is not really respecting that 200-day anymore. So that to me is a bit of a red flag. It's not respecting this 200-day. Those big moving averages should be respected pretty quickly, but this is above, below, above, below, above. Now, buying this here above the 200-day, okay, it gives you a good risk to reward to the downside. I agree with that. And technically we do have a V2, but this washout bar, here's day 1, day 2, day 3, this washout bar barely washes out day 1. It doesn't really prove that there's no more sellers down here. I like to see that really go down at least a quarter ATR and go back up. And then we're also basically coming from a lower low here. I like a higher low close above the 200. So, MACD is positive. We're above 50 RSI. I don't like this big bar back here either, and the prices back here either, because they definitely got sold. So with that being said, who knows? It could go up. I think my parting point on this would be that from a risk to reward ratio, you probably couldn't get hurt too bad. But as far as the actual setup and the up and down around the 200, and the very subpar V2 entry here, I don't think I would take it, but who knows? Might go racing up tomorrow. Did you buy it, Mount Doji? Let's take a look at Twitter. Yeah, see, I like Twitter better because here we make a lower low, we do rally back up, looks like back to about the 50. And like I said, like I usually say, the people down here, when they buy these lows, it rallies. But the people that bought down here are probably looking to sell if it rejects the 50, and that's what it did. So the people that bought here sold here. That's probably what it made it come down. Friday we did have a V1 here, so that is strong. We have a MACD crossover. Today looks like a V2, but you really can't have a V2 if you have a day 1 before. We're above the moving averages. We had a 520 crossover on Twitter, which is also positive, and we're at the relatively bullish neutral RSI of 52. But and on top of that, Mount Doji, it did trigger a fractal. Dang, if I would have saw this today, I might have looked at it. I may have taken that trade. So good job for taking a look at that. But here's our fractal. Here's a high with 2 lower highs to the left, 2 lower highs to the right. We did trigger that fractal. We're above the moving averages, the 5, the 10, and the 20. MACD's positive, and I do like the RSI. And some volume came in today too. So not bad, Mount Doji. Scott says, thanks guys, good info to have to do more research. I have a small amount of capital, but I'm not quite ready to begin trading, still learning. Okay, good for you, Scott. Don't rush into it, my friend. It's important to build up that capital first, right? And and to learn at the same time. You can always learn. It's free. You can watch the market. You can get a feel for the market. But I think a lot of people just go rushing into trading when they really don't have enough money to do it yet. But hats off to you for learning and watching. And if you have any other questions, Scott, let me know. I'm happy to help you any way I can. Chris F says you can also call your broker and see if they will work with you. Yes, that's true. That is true. A long time ago, I was with Charles Schwab, and I did negotiate with them, but from $4.95 down to $3.95, right? But it's still a lot more than $1. But Chris is right. You can negotiate with them. Mount Doji says, too much slippage with Robinhood. Oh, is that right? Well, I imagine, though, if you're using limit orders, you can't really have any slippage, but maybe on your market orders. But it makes sense, Mount Doji. I just don't quite understand how they can do it for free. I mean, it has to be made up in the bid-ask spread somewhere. Steve says, Robinhood gives HFT firms first dibs at bids. Yeah, so that's my understanding. You know, it's going to be made up through the bid-ask spreads. And back to what Mount Doji said, that's probably where the slippage comes from. Johnny says, I use RH and TradeStation. I would prefer to use just TradeStation, but for my small position size, I would get eaten up. Yeah, it's true. I mean, you really have to look at those numbers. You know, you can't make $20 on a trade and have $5 in commissions. I mean, it's just not going to work. I mean, don't even trade. You know, don't even trade. Wait till you have enough capital, or tailor your trading to something that actually uses limit orders, so you don't have the slippage. You get the price that you want. High frequency. Oh yeah, Ramble Rod asked for HFT. Yeah, high frequency traders. Chris, not trying to sell IB, but they also offer 2% interest on idle cash. They do charge you data fees. Some are waived. I 100% agree, Chris. I mean, is it 2%? I thought it was like 1.9, but close enough. Yeah, I mean, you get 2% interest on your money that's not being used. I mean, that's pretty awesome. And for me, you know, I don't use a large percent of my capital to trade, so I do like having that close to 2% return on the cash that's sitting idle. So yeah, it makes a big difference. Yeah, I think IB's good. I think IB handles most of the trading for like the majority of hedge funds. They use IB. Steve says, Bloomer article, Robinhood gets almost half its revenue in controversial bargain with high-speed traders. Yeah, I knew there had to be a catch. Scott says, yeah, I'm going off the idea that 25,000 minimum. Yeah, because 25,000 is the minimum you need for the day trader rule also. Frederick says, do you sometimes screen 100 stocks and find no entry to set up? Yes. I mean, just like today, right? I mean, we screened 44 of them and didn't find anything. And as a matter of fact, I went through the S&P 100 earlier today and I didn't really find anything. And I'll tell you, Frederick, I always feel like that if I have a day of trading where I don't do anything, it reminds me that I'm trading correctly, because trading correctly means sometimes not trading, right? You don't need to find something every day. If you're searching and you're trying to make it fit, then you're stretching, you know. As I've been telling you guys for a long time, it's important to just let the trade come to you. Don't force it. Don't be premature with the trade. Really let it come to you. You're much better off having no trade, having your cash sit at IB and getting 2%, right, than getting in a subpar trade. I mean, a penny saved is a penny earned. So, you know, if the market goes down and you don't have big positions, you've actually saving or, quote, making money too. So Mount Doji says, I did not get into XOM, but I did enter a small position Twitter. Good. I like Twitter. It's really literally the best thing I've seen today. You know, I mean, I do like that we come from a lower low. I do like that we go up to the 50. We went back under the 50. We had a V1 back over the moving averages and back above 50. So the question here for you, Mount Doji, is where's your initial stop on this trade? Chris F says, if you are just getting started, you could open a TD account and fund it with $1 and use their TOS platform and paper trade. That's a good idea. It's really important to kind of go through the simulations of trades. I mean, really, really important. You know, I spend a lot of time, everybody, even though I've been trading a long time, I still do a lot of simulation trading. Like on this particular, I'm just, you know, I'm barely grabbing a chart here. I mean, this is just a random chart, but, you know, I will go through many, many stocks day by day, just like this. Okay, here's Twitter. We're at a 45.37 RSI. I have no idea what's going to happen in the next bar. I click the next bar. Anything there? Did take out a... probably not. We're up against the third ATR channel. But I'll just go through and act like, okay, am I going to buy it here? Am I going to buy it here? Am I going to buy it here? Am I going to buy it there? Ooh, good thing we didn't buy it, right? Now, if it gets down to the 200... ooh, now it's a 31.76 RSI. Would I buy that? You know, I could, you know, using a close below 30 as my stop, but probably not after those big two bars. But who knows? Would it have worked out the next day? No, it would not have. But I just go bar by bar. I mean, I can literally do a year's worth of trading in a couple hours. Just bar by bar, looking for a setup. Do I have a double bottom with the divergence? No. We're coming from a lower low here. I hope you can see this on my screen, but you know, I just click and click and click until I find one of my setups. But it's good, you know, it's good practice. And you can probably do that on those simulators, I would imagine. Johnny Scott, I only use limit orders with RH buying or selling. They have some added benefits with their gold program. Yeah, I guess if you use Robinhood, you better use those limits. Frederick says, okay, thanks, because I was not finding any setups entries since few days. Better to wait. 100%, Frederick. I mean, that's showing some maturity of your trading. If you can't find anything, just don't buy anything, right? Just better to sit in cash. Ramble says, I use TD for paper trading, learning, and all. Good. Question, when stock moves against you and breaches your stop, do you close that intraday or wait till the close of the day? Chris, I always wait until an end of the day close, unless it hits my emergency stop. And my emergency stop is 5% for my entry. Let me see if I can show you an example to put this in perspective. Okay. So here on Philip Morris, I bought Philip Morris here. I'm going to go down 5%. That is my emergency stop down here. If intraday it gets down to here, I'm going to go sell it. I'm not going to wait until the end of the
Order
day,
canceled.
right? I have to have some kind of level where I just, even intraday, say I'm wrong. But as you can see, it did not hit my intraday stop, but my normal stop was a close below the 200. So I got out under the 200, just my normal stop, but my emergency at the end of the day stop, but my emergency intraday stop is down here 5%. Does that make sense, Chris? So I wait till the end of the day on my normal stops. I get out even intraday if it hits my emergency stop. Ramble says, TD does have 20-minute delay for paper trading, so no day trading, but you can learn options and stuff. Yeah. Well, you're going to need something that has real time, especially, you know, if you're trading off at the end of the day, because you have to know what the price is at the end. Mount Doji, I like to phase out of ATRs for Twitter. That worked well with XLF. Also going to keep an eye on the 50 as well. Yeah, the ATR channels are a good place to phase out. You know, when I studied with Kerry Lavorne, Mount Doji, that is his approach. He will take a third of his position off at the 1, a third of the position off at the 2 ATR, and the third of the position off at the 3 ATR, generally. So, you know, that's why I'm always so leery buying something when it's, or not buying something, but looking to exit something when it gets up to the third ATR channel. Because like I said, a huge majority, like 90% of the stock prices stay above the negative third ATR channel and the positive third ATR channel. But that is how Kerry Lavorne does it. He'll phase out at the 1 ATR channel, 1/3, another 1/3 at the 2, another 1/3 at the 3. Because these ATR channels are standard deviations. So when you get up to 1 standard deviation, you're going to have some resistance. If you can get through that, you're going to have another resistance at the 2 ATR and so forth. Yeah, you're going to have to watch that 50 as well, Mount Doji, for sure. Because, you know, it's not exactly, but it's kind of lining up with the 1 ATR channel as well. Yeah, let me know how that trade goes. Thanks, Johnny. You are certainly welcome. Hope to see you tomorrow. Thanks for coming. All right, everybody. Well, final call for questions. Let me know. Otherwise, I'm going to get outside, put on my hiking boots, and battle with this little puppy. Man, this little puppy has been something. It's amazing how just this little, small little thing can just throw a wrench into your day. My gosh, I go outside about 13 times a day. The happiest part of my days right now are when I see her go to the bathroom outside. I'm like, oh, thank God. All right. Well, listen, everybody, thank you for coming by today. I hope you're learning something. If you have any other questions, you can just send them to me email or by Twitter, and happy to clarify that. But hey, you're welcome, Mount Doji. And go out and do something nice for somebody today. Just a smile, a wave, hold the door open for them. Just do something nice. You might make a positive difference in their day. Oh, Ramble snuck one in. Can you look at WDC? Western Digital. Scott says, is it G or 2 for your first name? Well, actually the name's Gregory, but I've always spelled Greg with 2 G's. If you do the short version, G-R-E-G-G. Ramble, here's WDC. Why don't you tell me what's going on with this? Can you give me some feedback on what you think? I mean, do you want to buy here? Do you want to sell here? What would be your opinion on this based upon this chart that you can see right now? You're welcome, Scott. You're welcome, Frederick. What do you think, Ramble? Hey, you're welcome, Ron. But listen, as far my take on WDC here, if I owned it, I would probably be keeping it here because it closed above the 70 RSI. But if I would have bought this based upon something back here in the future, I most likely would have gotten out the first time. I would have lost the 70 probably here. But if I had held on to it, you know, like if you would have bought above the 200 here and you still had it, I would keep it. I would keep it above the 70 RSI. But as soon as it closed under the 70 RSI, that's when I would lock in my profits on this trade. But I certainly would not be buying it up here. You know, there's a difference between you're in a position, you're in the money, it's at a high level, that's okay to keep. But that's different than initiating a new position at that high level because the risk to reward is not in your favor at that point. So if I owned this right now, I would keep it as long as it's above the 70 RSI, because it has to be very strong to close above the 70 RSI. And there's some buyers that only come in at the 70 RSI, right? So, but you'd have to keep a real close watch on this as well. But if I owned it, I would not sell it here. I would keep it until it closed under, but I certainly would not be buying it here. I hope that helps, Ron. All right. Well, Ron and Frederick and Scott and Mount Doji and Chris F. Thanks for coming by, Chris. I think this is the first time you've been here. Appreciate it. Johnny, let's see. Frederick, Scott, good seeing you. Thanks for coming by, Scott. Steve Burns, thank you as always. And if you guys have not subscribed to Stephen Burns' Twitter channel, please do. It's a wealth of information. At S Joseph Burns. At S as in Sam, Joseph Burns. Do yourself a favor and subscribe to his channel. It's great information. Let's see. I think that was everybody. And Frederick, I think. And then Bruce is traveling today, so hopefully we'll have him back tomorrow. But thanks again, everybody. And listen, on the way out here, I've got to play the U.S. legal disclaimer on the way out. So thanks again. Hope to see you tomorrow. We'll see what the market brings. And have a good rest of your day. And talk to you tomorrow. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.